All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday. I'm already saying Wednesday. No, Tuesday. Today is Tuesday. Yes, the 24th of June, 2025. Still, so yes. Welcome everybody. Welcome to this quick little video which I wanted to make on everything what's happening right now. I mean, look, I'm recording this one just a little bit after the European markets kind of have opened. Yesterday, if you know that we got the the ceasefire, the truce between Israel and Iran, kind of moderated by the U.S. But look, about all this and a little bit more in a bit. Let me go through our risk disclaimer first. The content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, basically you know that this is what came up and the markets are very, very interesting. So look, also, just before I jump into the charts, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, I want to pick up on the German index DAX because again, it had moved nicely to the upside. I mean, Nikkei, of course, we can kick off with that one in general. Nikkei pushed higher. China made a nice, beautiful move here to the upside because, again, it kind of helps China a lot because, if there's no conflict with Iran, Iran's oil can continue going into China and China can continue producing cheaper stuff. So everything is kind of nice and dandy. Australia as well rallied, but now, like I said, the European market is open, and yep, we're seeing a major gap here to the upside here on the DAX. Look, I talked about this barrier right here, the 23,740 zone right here. I said to you that I will get a little bit more comfortable with the upside if we do push back above it. And I'm going to stick to my game because as we can see here, this is where a nice, beautiful holdup is happening right now. So everything is, like I said, working out nicely. Let's see if we can pop above this 23,740 zone and go for a new all-time high potentially, of course. Yep, then we'll go from there. For the downside, again, the same story here. I need to see a drop below the 50-day EMA and, drop somewhere below this 23,000 kind of 300 territory-ish. And then we'll take it from there. Now, look, in general, if you've missed the news, basically, they're after Iran launched its rockets at U.S. bases in Qatar. Yep, there was an agreement reached apparently, and look, in general, of course, we can start to talk geopolitics as much as we want, but the main focus here is the market. Whatever you're thinking, whatever it seemed to me like a little bit of a show. Eventually, everybody got what they wanted, and it seems like for now, at least, we're back, into the to the normal game. Now, the markets are rallying. The markets are welcoming this scenario. That's normal. I think it was if the Iran if U.S. would continue with Iran, I think that would be a little bit of a reputational damage for the White House, given that they have promised in their pre-election campaigns that they will be stopping wars, not starting. And well, this is a good example. That here we go. Where we stick to our plan. Anyway, we can, like I said, we can all debate this as much as we want, but it's everything is politics. Everything is a beautiful show. So unfortunately, we're all stuck in between it. Look, but what can we do is we can look at the market and try to make some sort of sense. Look, right now, we're seeing a push higher across the board in major indices. And I think that we could continue pushing higher because don't forget that there's a big event happening in the beginning of July, and that's the 9th, well, it depends on how you want to say it. Look at it, the 6th of July or the 9th of July. So the 6th is the last trading day is a Friday, and then the 9th is Monday. Basically, On Monday, we get the end of the 90-day pause of the U.S. tariffs. So in a way, imagine this: if there would be a further escalation in the conflict, and there would not be an agreement reached between countries on the trade tariffs, on the U.S. trade tariffs, that would just like bring the stock market really, really hard to the downside, and that would be, I don't know how you can get out of it then, and how could the Fed, help the U.S. stock market to get out of that one by cutting a lot of rates. Maybe that's what the White House wants, but I think that would be way too drastic. Look, for now, I think that the markets could take this as a positive. Everything could be coming in as a positive. Even some bad data could be ignored in a way. However, the main focus, of course, in terms of economic data is Friday. We're gonna get the US PCs, so keep your eyes on those because those are expected. Let me just jump into here. So those are expected to be a little bit on the higher side. So this is a little bit not really in favor for the White House, which wanted to see lower interest rates. On the contrary, this could just kind of confirm that the Fed is correct by not doing anything right now because inflation starts to pick up slowly. Look, but in general, of course, the main focus today, I think, is the commodity world. And let me just, before I'm going to jump into gold, oil. Look at this. I if you have been watching my videos before, I'll say the same thing, that I'm still overall bearish on oil. Yes, we had a beautiful move to the upside here, and look how well it all played out. Look how well these downside lines did their job, and they provided fantastic resistance. We entered, we reached the area near the 78 zone, and just kind of, we found resistance near these downside lines right here. This one's, by the way, taken from the highest point of, sorry, not the highest point, but the high of the October 20th of October 2023. And the other one is the steeper one is taken from um, the highest point of September of 2023. So look at this. I mean, now initially when we started seeing those escalations on the 12th of June, when Israel first launched its rockets at Iran. Then on the 13th, Iran responded. So basically, since the 12th, kind of, we saw oil kind of picking up in about, like, gaining around like 12-13%. Now, looking at this picture, we are kind of wiping out around 10%, well, actually more than 10%. So in 2 days, we're wiping out 17% of gains. I mean, that was like, wow, that's like spectacular. Look at this. I mean, this is just, talk about market manipulation. And yep, everything is drifting lower, and everything is now like very, very technical, I would say. Technical analysis is working here because previously, when I talked about the upside scenario, I said that, look, if we do clear this $65 mark on WTI oil, I'm going to go higher. And there we go. We are pushing. We pushed nicely to the upside here. In a way, technically, everything worked out like a charm. We hit these trend lines, found the resistance here, and now we're drifting back down, testing the $65 mark. Tested the $65 mark, rebounded, and now the question is, what's going to happen next? Is this going to be the where's my arrow? Is this is going to be the plateau from where maybe oil could, reverse and push back up here? Or actually, are we going to see a nice drop below the $65 mark and a drift lower? Now, a few adjustments have to be made, of course. This downside line has to be changed to become a little short-term upside line right here. Let me just put this one on the chart. There we go. And yep, we're, like we said, we're comfortably kind of sitting above this upside line still. So if we do clear the $65 mark and we clear the upside line, I'm leaning towards the downside, towards this other little upside support line, which is a little bit on the tentative side, don't get me wrong. And this is what I'm going to aim for. So in general, my idea of sitting and kind of remaining a little bit more on the bearish side is correct, because I'm happy about this. Honestly, I'm gonna brag a little bit, but I'm really, really happy about this because, yes, conflict is one thing. Conflicts create shocks. However, in general, the economy is China is like on a slowdown because again of the tariffs. They're not producing much. Demand has dropped maybe a little bit. So and China does consume a lot of oil, especially Iranian oil, which is cheaper because it's not on the official market in a way. So that's why their goods are a little bit more attractive. But however, the U.S. tariffs are on China. Those are kind of damaging now the trade. Not only the Chinese, not only is damaging the Chinese side, it's also damaging the importers on the U.S. side. So which are forced in a way now with the official rhetoric that you need to kind of produce in the U.S. Okay. Yeah, right. So basically, like I said, now the situation is very difficult. We have oil, there is supply, there's no shortage of it. So why the hell it has to go higher? Only because of the conflict. If the conflict would continue, then yes, of course, we could see oil, pushing higher. But because the conflict is now sustained in a way. Apparently, God bless Israel and God bless Iran. I mean, the rhetoric goes like this right now. You can check it on Truth. What's the Truth Social? Or yeah, what's the social media platform there? Anyway, so the post you can check on that one. But like I said, it's really like I said, it's really everything comes back still to the economy. It now got quieter. The conflict kind of somewhat is sustained. We'll see if for example, maybe like Israel doesn't break the ceasefire or something like that, and because we know that it did with Gaza in there. But anyway, look. So the question is right now, like I said, what's going to happen next? I mean, are we going to see some action to the downside here? If, like I said, if there's no conflict, then there's no point for oil to push higher because again, we have oversupply, we have lower demand. Simple. So let's see what's going to happen with the $65 mark. If we can clear it, if we can do that, wonderful. We can see a move to the downside. Same story with natural gas. I mean, it's drifted lower wonderfully. So yes, we didn't stay above the 3.84. We just dropped below it, and now we're resting on the 50 and the 100-day EMAs. The downside scenario for me on this one would actually be on a break of this steeper upside line, which is a little bit on the tentative side, taken from the low, the 24th of April. If we can clear that, if we can clear the 200-day EMA, I'm leaning towards the downside. Let's have a look at gold very quickly. Gold, of course, logically, drifting to the downside. There's no issue. There's no need for a safe haven, and we're drifting to the downside. There we go. We're approaching the 50-day EMA here. Actually, let's put it this way. We're not approaching it yet, but it could be a nice good target. This is roughly, on my chart, this is roughly around the 3,280, 80 something zone. Good potential target. Look, we might reach it, we might not reach it because we have like similar story here. We reached it here, but we didn't reach it there. So, don't really kind of, get focused on that too much. However, I am still, I talked about this idea a few videos ago, and I said, look, maybe we're forming something of an ascending triangle pattern. So for that, we need to see a retracement back down, a test of this area, rebound, and then maybe, just maybe, we could see a nice, beautiful move back up here, a rebound from this upside line. So something like this, ladies and gentlemen. Like I said to you previously, if the 3,430 zone continues to provide resistance, then yes, a little bit of a retracement back down could be possible. However, if the 50-day EMA together with this upside line fails, this upside line, by the way, is taken from the lowest point of April of this year. If it breaks, then the next target is the 100-day EMA, or maybe even lower. We'll see. But again, first, there is still a chance for the bulls to step in here, but we're now currently monitoring the upside line together with the 50-day EMA. If you really don't like this area at all, I would say, honestly, I'm not going to blame you. What I would do is just wait for a clearance through one of the sides of this potential ascending triangle pattern. So yeah, and then we'll go from there. A quick glance at silver. Silver is modest here, but doing a little bit better than gold. And I would just wanted to pick up very quickly on a few pairs. USD JPY. Oh, by the way, DXY. Sorry, before we go, DXY dollar index. There we go. Drifted lower to the downside here. Again, no need for the US dollar as being a safe haven, right? So we can go back to normal. We could go back to trying to make US exports more attractive for those for let me for those regions which the U.S. is kind of really battling, trying to battle it out, and these regions, right? So yeah, Chinese against the Chinese offshore yuan. You can see the dollar is weakening. Euro is on the stronger side against the US dollar. The British pound is stronger. So basically, like I said, it's becoming less attractive for U.S. domestic for U.S. importers to import something from abroad, especially from Europe, from UK, from China, just because, like I said, dollar is dropping a little bit, and yep. Oh, and by the way, Japan. Japan. Okay, Japan is a little bit of a different story, so probably it's not. I'm not going to throw it in the same category, but it's also on an interesting side. Ladies and gentlemen, that's it. I just wanted to quickly run through what's happening. So thank you very much for watching and listening. I really appreciate your time, ladies and gentlemen. Like I said, this was just a quick glance on what's happening after the so-called ceasefire and how the markets are reacting. So yes, a lot of things to monitor. Keep your eyes on that, ladies and gentlemen. Thank you very much for watching and listening. As always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you next time. Thank you very much, and bye-bye.